Mihir Vora, CIO of Trust Mutual Fund, joining in now. Mihir, great to have you on as always. Well, it's not quite TGIF or party time for the markets, but then, slow and steady wins the race at the end of it. I think that we're staying above 26,150, not seeing some big selling pressure is also good. What do you think are the factors that are going to move the needle for the Indian markets right now?
Hi, good morning. I think the biggest factor, of course, is the trade deal going through. So that's one event that everybody's waiting for. Second is the fact that some of the AI plays are losing sheen in the US, and that's what was sucking money away from all other markets, including India, etc., into the US. So if that AI frenzy reduces a bit, then we might be in for some more money coming into the country in India, China, etc. From the FIIs, because that was just taking away too much attention. There was too much momentum on that side for global fund managers to ignore. So when a big sector is moving so fast, you can't just ignore it. You have to be there. So if that momentum is broken, then probably we should see money coming back to the country. And the third factor is results, of course. We do expect the second half to sustain the momentum in consumption as well as government investment as well as private sector investment, which should ultimately lead to credit growth. So if that happens, then we should see the banking sector, which is the largest sector in the markets as far as the index weight is concerned, that could lead the way. So these are some of the developments that one should look forward in the next half.
Mihir, hi, Alex here. On the second point, with regard to overseas investors coming in, I have a counter argument to make, because of course, when we look at our own home, we're happiest, and we praise our home as far as possible, but others looking in may not have the same opinion, particularly considering that we're at or very near all-time highs for the benchmark, and valuations have not come off very materially. So while relatively speaking, compared with other markets, we may have underperformed, valuations are not necessarily extremely attractive from the outside in. Would you agree?
No, Alex. First of all, India always trades at an absolute premium to most of the markets, and that's because of the superior structural higher growth story that we have. And that's not the case now. It's been the case for the last 20 years. We've always traded at a premium to emerging markets in general, and even to at par with our premium to the US markets also, because our earnings growth has been superior. So that's one point. Relatively speaking, we have underperformed the US markets in the last 12 to 15 months. So the premium of India compared to most other markets in the last 12 to 18 months has actually shrunk. So if we expect that historical growth rate of India will continue to be higher than the rest of the world, then the India premium should also come back to historical levels. So I think it's always about relative valuations, relative premiums, rather than absolute premium, because in absolute terms, we've always been at a premium.
Okay, right now, Mihir, it seems like markets are not really taking into account anymore what we've seen in Q2 and all of the commentary of a better second half. Do you see a situation where once the US-India trade deal is in place, or even if there is some direction towards this, then that kicks in, or has it already been priced in?
I think markets are reacting well to results. For example, while the Nifty is more or less close to the highs, the mid-cap index has actually broken through the previous highs. So it's not like the markets are not reacting to the expectations of a better second half. They are reacting to good existing results, as well as I think there is a little bit of optimism priced in for the second half. I don't think it's overpriced. So if we continue to deliver, then there is a case for the markets to re-rate even further from these levels.
Mihir, good morning. Neeraj here. The interesting piece has been that the last couple of months has been very concentrated towards the large caps, if you will, and also large caps which haven't performed thus far are doing well, because the obvious differentiation that we saw was that M&M hasn't performed in the last 1 month, but Reliance has. In some sense, there is a bit of a rotation happening there. Based on the Q2 numbers, the commentary, and the portfolio positioning that you may have in your portfolios, what do you think takes the market higher, or what would be the best performing pieces if the indices were to rally from here on?
Oh, absolutely. So, as you correctly mentioned, there are sector rotations happening. The biggest sector rotation that can drive the market further from these levels is the financial, and within financials, the banking sector. Both private sector banks as well as public sector banks. If you look at the last 2 years, the banking sector in general has been the slowest performer within the large cap as well as the mid cap, small cap space. So that's one big segment which actually has not contributed to the Nifty, even when the Nifty has reached almost at its previous high. So to that extent, the second half credit growth is a factor of great importance, and in the Nifty 50, banking sector is almost a third of the weightage. And if that performs, then that should be the big driver. Second is IT again. Indian IT has been neglected, and with good reason, I would say. But the underperformance is quite stark now, and that's also because of the anti-AI play or India not having a big AI play. So as we just discussed, if the AI hype reduces, then you might see a bit of a leg up for the second largest sector in the index, which is the IT services index in the Nifty 50. So I think these two large segments have not yet contributed to the Nifty, and these can actually lead the index to newer highs in the second half.
Okay, thank you so much, Mihir, for speaking with us. Always a pleasure to have you on. Mihir Vora, CIO of Trust Mutual Fund.